Massive food inflation. Farm prices up 31% as eggs, meat, vegetables, chickens, dairy, corn, and wheat soar. We all know that inflation is raging right now, and the Fed is trying to combat inflation by raising interest rates. They just announced another rate hike today, so we will cover that, as well as the possibility of a recession, and we'll talk about how the markets are reacting to the rate hike news. All right, let's do it.
Get ready for SD Bullion's Monster Box sweepstakes that includes 500 Silver Eagles. You could be the next lucky recipient of a phone call like this.
This is Dr. Tyler Wall, CEO of SD Bullion. Well, I'm calling you to let you know that you won the SD Bullion giveaway of a Monster Box of Silver Eagles.
So click the link below for your chance to win.
So I wanted to start off with this article, just kind of highlighting the food inflation that we've been seeing. 31%, that's no joke right there. And this little part down here says, whoops, just highlighted like the whole screen. The prices of U.S. farm products continued to rise in March, reflecting the inflationary pressures gripping the U.S. economy and fears that the war in Ukraine and sanctions in Russia could lead to food shortages around the globe. So yeah, I mean, obviously food shortages, that's going to raise the price of food. We know that. But let's talk about the main news today, which is the rate hike. Gold price turns positive as Fed raises interest rates by 50 basis points. This article just came out. Today is May the 4th. Happy Star Wars Day to everyone out there who enjoys Star Wars. I like the older movies, the new ones not so much. But anyway, gold is up at the moment around 20 bucks. Silver is up about 35 cents at the moment. So I hope you bought the dip over the last few days. But let's dive into this here. Gold prices have pushed into positive territory as the Federal Reserve makes its biggest rate hike in 22 years. As expected, the U.S. Central Bank raised interest rates by 50 basis points, pushing the Fed funds rate to a range between 0.75% and 1%. Also, as expected, the Federal Reserve will reduce its balance sheet by a total of $47.5 billion. Okay, so they're reducing the balance sheet and they're jacking up interest rates. So, you know, what's this going to do? Is this going to cause a recession? This in itself, the 50-point rate hike or 0.5%, is not going to cause a recession, but it looks like we might be headed that way. Actually, down here, it says this part right here. The Federal Reserve also noted that interest rates will continue to move higher through 2022. Currently, markets see a nearly 100% chance of a 75 basis point move in June. So, the last rate hike, 0.25%. Now we're at 0.5%. And then the next one's going to be 0.75% apparently. Now let's take a quick look at how everything is reacting to the current rate hike. So precious metals are up. Gold is up at the moment, 18 bucks. It's been bouncing around. I'm sure by the time I post this, it'll bounce around even more. Silver up 44 cents at the moment. So wow, nice little pop there in silver. Platinum up 32 bucks and palladium up just a skosh. Crude oil is up over $5 a barrel at the moment. So big change there. And then stock market. So Dow Jones, NASDAQ, S&P 500. Those are all up. However, the US dollar index is down. So dollar down, everything else up. Lastly, for those of you playing the crypto casino, you'll be happy to know that cryptos are soaring today on the news. Bitcoin hitting almost $40,000 at the moment. Okay, so far in this video, we've talked about inflation, we talked about the rate hike, and we talked about the markets responding to the rate hike. And we kind of touched on the possibility of a recession, but I want to talk about that a little bit more because I think this is something we should be paying attention to. Now, the higher that they jack up the rates, the more likely it seems like we're going to go into a recession. I mean, they're basically making debt more expensive. And there's a lot of individuals out there who are using debt. There's a lot of businesses who are using debt. The government is using debt. And so the more expensive it gets, the, I guess, harder it is to use. And so, are people going to become unemployed? Are businesses going to go under? What's going to happen, right? Is there going to be a big business that needs a bailout? Quite possibly. And, is the government going to bail them out? Of course they are. That's what they've been doing for a number of years now. They're not letting the problem solve itself. They're trying to step in and fix the problem. So how high can they jack up rates before everything comes crashing down? I'm not sure, but take a look at this chart right here. So the line in yellow or gold or whatever that color is the federal funds target rate. This is the interest rate, so to speak, that the Fed is raising and lowering. So when we say there's a rate hike, then this yellow line, I'm going to call it a yellow line, will go up. So back in the late 70s, early 80s, you can see it was almost at 20%. So interest rates were sky high because inflation was really high and they were trying to combat inflation. Well, are they going to be able to raise rates that high if inflation gets that bad? Absolutely not. You can see as the years have gone by, the peaks and valleys, and the peaks are getting lower and lower and lower. They honestly might not even be able to get up to like 2 or 3% before they have to change course, right? Bring it all the way back down to zero, perhaps even make it negative, bail out the banks, bail out the businesses, send out stimulus, all that kind of stuff. So we will see how all of this plays out, but in my opinion, it seems like we do have a recession possibly on the horizon. This Bloomberg article that recently came out, the headline says Goldman Sachs sees U.S. recession odds at 35% in next 2 years. Honestly, I think that the percentage chance is much higher than that, but we will have to wait and see what the future holds. Now, the one thing I haven't really talked about in this video yet is the root problem. Why are we in this situation to begin with? And really it boils down to the creation of excess currency. The Fed has been creating currency for a long time, but recently it's gotten pretty bad. And I guess in the very recent past, they've kind of slowed down a little bit. However, if we do go into a recession, you can pretty much guarantee they're going to light up the printing presses again, and this is going to drive inflation even higher. So are we caught in this cycle, or is the whole system going to come brutally crashing down? I certainly hope it doesn't, but if it does, you need to make sure that you have some wealth outside of the system, which is why I advocate for buying gold and silver. I've been doing that for a number of years. There's a lot of reasons to buy gold and silver, and I do talk about them in many videos. Feel free to check those out. Now, the last thing I will do is ask your thoughts on a recession. What do you think the percentage chance is? Feel free to comment that down below in the comment section. Also, how high can the Fed jack up rates before they have to reverse course? I'd love to know your thoughts on that. Lastly, I want to say a massive thank you so much for watching my video, and I will see you all in the next one. Silver Dragons, out.